Hey everyone, welcome back to our finance podcast. I'm Maya, here with Vid, and oh man, what a day. SpaceX IPO is about to start trading, and the Dow is rising on Iran peace deal hopes. Vid, what's going on?
Yeah, so here's the thing, Maya, when there's a potential peace deal, it's like a weight's lifted off the market's shoulders, and investors get a little more optimistic, which is why we're seeing the Dow rise, and it's also why we're talking about ETFs today, because beginners love them, and for good reason.
Wait, so you're saying ETFs are connected to what's happening in the market right now, like the Iran peace deal?
Right, exactly, because ETFs are a way to invest in a bunch of different stocks or bonds all at once, like a basket, and when the market's volatile like it is today, ETFs can be a great way to diversify and reduce risk. I mean, think of it like a coffee shop. You can buy a single coffee, or you can buy a coffee and a pastry and a sandwich. Altogether, it's like a bundle, and that's basically what an ETF is.
Haha, okay, I think I get it. But how does that actually work? Like, what's in the basket, and how do I choose what I want?
Great question, Maya. So an ETF, or exchange-traded fund, is like a mutual fund, but it trades on an exchange like a stock, and it's made up of a bunch of different assets like stocks or bonds or even commodities, and you can buy and sell it just like a stock, and the price is based on the net asset value, or NAV, of the fund, which is like the total value of all the assets in the basket, divided by the number of shares. So for example, if an ETF has 100 shares, and the total value of the assets is $10,000, the NAV would be $100 per share.
Okay, so it's like a stock, but it's made up of a bunch of different things? Got it. And what's the benefit of that? Why do beginners love ETFs?
Yeah, so here's the thing, Maya. When you buy an individual stock, you're putting all your eggs in one basket, but with an ETF, you're spreading your risk across a bunch of different assets. So if one stock goes down, the others can help balance it out. It's like having a team of stocks working for you instead of just one. And it's also a great way to get diversification without having to buy a bunch of individual stocks. I mean, think of it like a friend's car loan. They're not just lending money to one person, they're lending to a bunch of people, and that reduces their risk. It's the same idea with ETFs.
That makes sense. So what's happening right now in terms of the market and the economy, and how does that affect ETFs?
Okay, so right now, the VIX is at 1768, which is a measure of volatility, and the 10-year yield is at 4.49%, which is a measure of interest rates, and the SPY, which is an ETF that tracks the S&P 500, is at $741.75. So what that tells us is that the market is a little volatile, but it's also expecting some growth, and that's why ETFs are a good option, because they can help you navigate that volatility and get some diversification. I mean, think of it like buying a house. You wouldn't just buy one house. You'd want to spread your risk across a bunch of different investments like a portfolio, and that's what an ETF can do for you.
Right, so it's like having a team of stocks and a team of investments working for you. Got it. So what happens next? Like, what are the scenarios and what are the probabilities?
Okay, so if the Iran peace deal goes through and the market continues to rise, then ETFs that track the S&P 500 or the Dow could do well because they're tracking the overall market, and if the market's going up, they'll go up too. But if the deal falls through and the market gets more volatile, then ETFs that track more defensive assets like bonds or gold could do well because they're less correlated with the overall market and can provide some stability. I mean, think of it like a baseball game. You've got your offense and your defense, and you need both to win. It's the same with ETFs. You need a balanced portfolio to navigate the market.
Okay, so it's like having a strategy and a plan and being prepared for different scenarios. Got it. But what are the probabilities like? What's the likelihood of each scenario?
Yeah, so it's hard to predict with certainty, but based on the news and the macro data, I'd say there's a 60% chance the market continues to rise, and a 30% chance it gets more volatile, and a 10% chance it crashes, but that's just a rough estimate, and the key is to be prepared and have a plan and to use ETFs as a tool to help you navigate the market and achieve your goals. I mean, think of it like a road trip. You've got your map and your GPS, and you're prepared for different routes and different weather conditions. It's the same with investing. You need to be prepared and have a plan.
Okay, so what's the bottom line? Like, what do I need to know as a beginner?
Yeah, so here's the thing, Maya. ETFs are a great way for beginners to get started because they're diversified and they're easy to use, and they can help you navigate the market and achieve your goals. And the key is to have a plan and to be prepared and to use ETFs as a tool to help you get there. And remember, it's educational only, not financial advice. So always do your own research and consult with a financial advisor before making any investment decisions.
Right, got it, and thanks for the explanation, Vid. You're a great teacher, haha. And to our listeners, Thanks for tuning in, and we'll see you in the Discord, where we can continue the conversation and learn more about ETFs and investing and the market.
Yeah, and don't forget, investing is a journey, and it's okay to start small and to learn as you go, and we're here to help and to support you every step of the way. So thanks again, and we'll catch you in the next episode.